There's an end-of-month rush of important news from markets next week here in Europe, and Sarah and Nina are here to discuss that. Sarah, I guess the highlight is going to be Eurozone inflation numbers for April.
Yes, very much. The worry about deflation or low inflation is not going to go away anytime soon.
Right.
After inflation fell to a 4-year low of 0.5% in March, we'll definitely be looking at if this was just sort of a one-off really low number or it's something more fundamental. But due to the timing of Easter that was in April this year, inflation should pick up to 0.8%.
Why do you say that? Why would that be?
Well, you have all the holiday travel, people go out to eat more, so just pushing up prices.
Holiday packages and things like that. But I think it's debatable about how much of an uptick we see. Some people are expecting it to stay around 0.5%, maybe up to 0.8%. So it's really key how much of an uptick, if there is one.
So it's unlikely to put an end to this debate about what the ECB does.
Nothing will put an end to this unless we see inflation moving back to the ECB target really, really soon. Draghi and the ECB in general has been opening the door more and more for quantitative easing. And just recently, Draghi said that if in the medium-term inflation outlook worsens, then one of the ways they could fight this is by launching a broad-based asset purchase program. So it wouldn't just be sovereign bonds, but could maybe be some private sector assets as well.
Okay.
So it's a big bazooka. Maybe.
All right. We'll have Eurozone unemployment figures as well. I guess those are going to remain in the high sort of double digits.
Yeah, they're at 11.5% at the moment, that rate. Yep. And given past revisions, it shows that that rate has been at that level since October last year. So it's remained stubbornly high. The interesting thing is the divergence between Germany and France, for instance, where the labour market continues to perform better in Germany but is deteriorating in France.
Okay. Things have been looking up a bit more here in the UK, and we'll have first quarter GDP numbers. Do you think those are going to confirm the better news in this country?
Yeah, it certainly seems like it. The estimates I'm seeing are for around 1% growth for the first quarter. And the Bank of England, in its minutes that came out this week as well, also said that they expect a growth around that level. Okay. So the thing here, the tricky point is that the weather was really bad in the beginning of this year. We had some floods and really, really harsh weather in southern England. So that could skew these numbers a bit.
Survey data has been holding up pretty well, which bodes well.
And there'll be UK PMIs as well.
Manufacturing output PMI data is due, and that's sort of softened for the last over 4 months. But it remains in expansion territory and at relatively strong levels, so it's quite robust on that front. But we still have services output data to look forward to in the coming weeks.
Okay, and then at the end of the week, our favourite time of the month, it's US non-farm payrolls. What's the winning number this month, Sarah?
Well, we're looking at a magic number around 200,000, which is a key level because that's when the labour market starts to become more sustainable. Estimates around 195, 205, so it's picking up. We've seen layoffs falling a bit, and there's a general broader trend that the labour market is improving.
Okay, let's switch briefly to the corporate front, and it's going to be oil majors in focus next week.
Yep, we've got Royal Dutch Shell, BP and Total reporting their first quarter earnings next week, and we're expecting production to be soft. Royal Dutch Shell did warn that financial performance is unlikely to rebound strongly this year. And also for Total, there's been interruptions in Nigeria with production affected there, although ramp up in production in new projects should hopefully offset some of that. No dividend increase is expected because they did that at the last quarterly results. But with BP, we are expecting a bit of a dividend uplift because they're now reviewing it every half year.
Okay, and oil prices have been broadly flat, so there may not be too much excitement.
Not much to get excited about.
Okay, thanks very much, guys.